Wednesday, December 21st, Stan Ehrlich, market analysis. And this morning, as usual, I start out with the S&P 500, the SPY, which is the ETF for the S&P 500. And it is my main go-to index. Generally speaking, the DIA, the Dow Jones, and the QQQ, the NASDAQ, follow suit or sometimes lead the way. A little bit stronger, a little bit weaker, but the general index I like to watch and forecast the overall markets is the S&P. Well, I was able to catch the bearish turn last Tuesday, the December 13th date. We went down 1, 2, 3, 4 days in a row after that, broke out of a trading range and got down into a support area and finished closing an old gap. Then the market started bottoming out. It didn't look like it on Monday because of support and almost being oversold. Yesterday, the market dipped down to a minor new low, a little bit lower than Monday, did get oversold on my custom relative strength index, which is the subgraph on the bottom. I know it looks like something else, but it is RSI, which I learned RSI from Wells Wilder himself back in the 70s and 80s, and also stochastics, another oscillator from George Lane, an old friend of mine. Too bad he's gone now. So, being in an oversold condition, yesterday, with a slightly higher close, we have a mild upside reversal, but that's more important because of the support area that it started to bounce off of and the expected Santa Claus rally to begin today. 3 days before, 2 days before, and 1 day before Christmas, which is Sunday, you're supposed to be buying and let go of your long positions the first trading day, second trading day, and third trading day of the new year, January. That's the basic Santa Claus rally. We refined it to the time of day for entry, and we are already long with a profit. And we will do the same thing tomorrow and Friday. And let's see how it ends the first week of January, since today's the first day. So currently up 590 on the spider, almost 6 points higher on the day, looking pretty healthy. It did come back up to close, excuse me, to close a gap, but not quite completely from several days ago. The gap is right in here around 387 and a quarter, which I talked about yesterday, and probably the day before that. Excuse me. And maybe even the day that it actually occurred, which is Friday of last week when it gapped down. Now, I'm expecting the market to hold, give or take a few points. Pardon me with a cough. I'm closing on a firm note today, maybe around 5 higher like it is. And it could make higher highs to finish closing this lower gap, the one that it created from Thursday to Friday of last week. Now, on Wednesday to Thursday last week, we also gapped down, and that gap is around 395 and a half. I'm expecting that gap to be closed also, and part of the rally of the Santa Claus rally. So whether we fiddle around here or accelerate more or maybe set back a slight bit, not much, doesn't really matter too much. I'm expecting to see a little more strength probably today, but not quite sure about that, to close this lower gap. And that will be closed precisely at 387.89. Today's high so far is 387.30. So another half a dollar or so above today's high does the job. And then more strength to close that gap at higher levels. Here's a bit of a problem I've got. I really don't want the market to accelerate too much further than the mid 390 area. 95 and a half, 395 and a half closes the gap. That's fine. Do that and then start to turn back down again. The double top that we had with the first high on December 1st, which was the top since the October lows, which we picked in advance. We talked about it 1 to 2 months before it happened. And what a whopper of a great Ehrlich reversal. Buy signal turns my charts green for that price day. And that was October 13th. Combination of a certain level of oversold conditions using my custom RSI and a bullish engulfing, which is a minor modification of the original bullish engulfing. That took hold October 13th. Great. It ended up being the head of a head and shoulder bottom. Fantastic. Minimum upside objective was fulfilled and exceeded a little bit, which is normal. And finally, again, going back to December 1st, you have a high, almost an overbought condition, not quite. A little pullback to support. Then, with the Fed announcement that they were going to not raise rates quite as fast as they have been in the past, the market jumped up on December 13th and couldn't stay about a half a point in new high ground and failed miserably, closing just a little bit higher on the day relative to way over 10 points, I believe, 12 maybe. The next day down, that was Wednesday of last week. Thursday of last week, down some more, and Friday gapping down a second time last week. Okay, again, support held. Today's the beginning of the Santa Claus rally, and we're up 5.6 points at the moment. Looking pretty good. I'm happy, very happy as to what's happening. My ideas so far are working out pretty darn well. I'm very happy. Let's look at the 5-minute chart. 1 minute chart on the spider, and we seem to have reached a little resistance. We have a second attempt to make higher highs that failed so far, but we haven't seen a lower low, no minor downside breakout at the moment. And even if it does get below 385.30-ish, that doesn't mean too much. It may sink off another point or two, but we're still up 5.5 at the moment to 385.98, call it 386. So heck, it's less than a point lower. And the downside objective on this little trading range would be only 384 and change anyway. And that's still higher in the day by a decent amount. One minor problem, we gapped up this morning. So we have actually left a small gap behind between today's lows and yesterday's high. Gaps are almost always closed. I've been saying that for the months that I've been doing this YouTube video, market analysis. So we're going to probably come back down and close this gap from today's low to yesterday's high. But I think we're going to go up first to resistance, close gaps, and then come back down again and continue to fail. I don't see a major multi-year low until about February of this coming year. So another couple of months, and I look for lower levels, maybe a challenge of October lows. Not quite sure about that. Let's go to the DIA. During the rally, since October 13th, a magic date, we have seen the DIA get the strongest, the fastest, the quickest, and make the highest highs for the longest period of time. Well, that ended last Tuesday on the FOMC announcement. So we've come down with the S&P, and this morning we gapped up. There's the gap to close in the near future. I'm thinking the second week of January. Between now and then, I'm hoping that and expecting the Santa Claus rally to work again. Last year, it made over $3,000, And I was offering, and I still do, if you want to go and send me an email at info@ersignals.com, that's info@ersignals.com. I'll be more than happy to provide you with it's $29.95, the exact timing for the Santa Claus Rally entry and exits. Okay. So the commentary for the DIA is almost exactly the same as the Spider. And what about the Qs? Well, the Qs didn't actually get today lower than yesterday's low, or I meant to say, excuse me, the Qs didn't gap up. The S&P did, the DIA did, but there's no gap in the Qs. They opened a little below yesterday's high and then started to rally. It did get oversold, and I love oversold and overbought conditions. They frequently, a very high percentage of the time, provide me with the tools I need to pick turning points in the market. And of course, October 13th was the bottom in the QQQs. We also got the high of the move on August 16th. We also got the historic high of the market on November 22nd of last year, a little more than a year ago, which was the end of the bull market after COVID and since. Now, that's why these bars are red or green. They present buy signals that are frequently huge, long-term, multi-month signals. Many times they are smaller, short-term time frame signals, and occasionally they don't work, but we have money management tools in place always that provide us with relatively small losses, so we never get killed. Okay, resistance in the Qs is right under 280, and that's probably where it's going to stop rallying. There's no gap to close on the Qs at higher levels, like there is in the DIA and especially the SPY. Okay, let's stop the indexes at this particular point and go to futures charts. I'm just going to fly through these pretty quick. I hope you can see these on your screen. I got soybean meal. We got nothing going at the moment. It's sideways. We got bond market. I was expecting it to start to make new lows a week or two ago, and that's correct. It started to make new lows yesterday and sideways today. I look for a little bit lower level, not too much. I actually think that the bond futures and the 10-year note futures are building long-term bottoms, but it may take another few months, maybe 2 or 3. The S&P 500 E-mini is the same as the SPY, so there's no additional comments there, except it doesn't have the same gaps that the SPY does, because you guys know it trades essentially 24 hours, except on weekends, kind of like forex. OJ, nothing new. Soybean oil, we caught a couple of weeks ago a bottom to the damn day, and it's made a new high since yesterday and today. Next was natural gas. We might be forming a double bottom. I can't tell yet, but we're at the proper levels under the proper conditions. I just don't have any signals to indicate that that's going to come true. So natural gas, I'm neutral to a little bearish. 10-year notes, same as bonds. Bottom formations occurred. They came true. I was able to detect resistance areas, excuse me, and the beginning of this move down, which now has made new lows for the last few weeks. It's exactly what I expected. Sugar got overbought the last couple of days. Don't run after markets. Never run after markets. You're going to almost always buy the high of a rally or sell the low of a break. Big mistake. Live cat, be patient. I know it's hard sometimes. I've been at this 52 years. I ought to know. Broker 35 years. Hedge fund manager. Live cattle. Wow, what a big rally today. It's coming close to overbought. Not quite yet, but this is a significant upside breakup. I'll blow up this particular chart because it is looking pretty bullish. This is a new high for many months. Wow, we're going to go back to February. Well, there goes the cost of steak. It's going up right before Christmas. Great. Okay, that was live cattle. Crude oil, I'm neutral to slightly bearish. Let's go look at high-grade copper. Nothing going on. Neutral. Wheat, nothing going on at the moment. Cocoa, same comment, going sideways. How about silver? Uptrend, not overbought. Probably has some more elbow room to the upside. Same thing with gold on this particular chart. I'm going to go back over here to the left, high grade, HG, neutral. Oops, I'm sorry, I just went through that. Let's go down to the bottom left-hand corner. Platinum, flat, sideways market, support held, kind of neutral, waiting for a breakout, one way or the other. Live hogs, good rally today, very sharp one. Maybe it's because of the weather. It's going to be very, very cold here the next few days, except, yay, California, Southern California is going to be actually around Los Angeles, 77 degrees on, give or take, on Christmas Day. Coffee, neutral, sideways. Corn, we caught the bottom of the break a couple of weeks ago to the exact day that's turned green. We'll go up to soybeans. A slight bias to the upside, a little bit friendly at the moment, nothing particular spectacular. And lastly, heating oil. I'm neutral to bearish. The trend is down. No significant signals at the moment there. How about forex? We did get the bottom with a green bullish engulfing ER signal on September 28th. Boom. And it's been up ever since, except, last week we had a sell signal. A bearish engulfing with an overbought condition and a turn the price action red. So I'm now bearish on the euro dollar. If that's true, I should be bullish on the dollar index, the reverse of it. Sure enough, we got a major sell signal at the top up there. I think I'll remove that little circle. And a red price bar. Overbought conditions and an outside down day, the old name for bearish engulfing. You know, candlesticks didn't become particularly popular until the mid-'80s. Why? Oh, I think it's because Windows started coming out with color on your screen. My first computer was 1977. It was an Apple II Plus, and I had an Apple IIe as well, and I've had multiple machines ever since. But we had green screens or gray, black and white screens back then. I have had 2 buy signals the last few days in the dollar index. That correlates with the sell signal on the euro. So they match. Dollar index going down, up, and the euro is going to go down, I expect. US to the Japanese yen. Wow, got oversold dramatically yesterday, and it's up a little bit today, but the trend is down. The trend is your friend. Still looking for lower levels. I want to point out, though, that we have come down to a rather interesting support area, 131, give or take a point or so. There's highs back in April. There's a low at the same ballpark in late July, and again now. So the long-term trend is actually bullish. Let's see what happens when we get up to 135, if it can follow through. But that's exactly what I'm expecting on a rally, at least the high 134s. Next, August, Australian dollar to the US dollar. I got to say, I don't have a clue. Nothing. US dollar to the Canadian. Yeah, we picked the top. Yeah, we got close to the bottom. And nope, I don't have an idea at the moment for you. Sorry, neutral. US dollar to the Swiss franc. Obviously, oversold conditions a few days ago. We did have a bounce. Don't seem to be able to change the trend. I'm neutral to bearish. And lastly, the euro to the Great British pound. Gosh, we got overbought. Even though today's a higher high than the last few days, I don't expect it to follow through very much. At resistance as well, I'm looking for it to turn back down a modest amount. If we break below 0.85, then we have a bear move coming. Right now, neutral to a little bit bearish. Lastly, the sector section is looking at groups of stocks that are in the same industry: gold mining, pharmaceuticals, electronics, blah, blah. So this particular symbol, XLP, I've got no particular signal at the moment. I'll go flying through these. I'm really looking for green bars or red bars like today or a couple days ago, if you didn't listen to the recordings in the last several days. Next is IYE, and I don't care what the name of the index is. It's not going to help me. I'm not a fundamentalist, and I kind of nickname it fundamentalist. Fundamentals are always late by the very virtue of how they're calculated, unless they're coincidental with real news, something that happens suddenly that everybody knows about real quickly. Neutral to bearish at the moment on IYE. SMH, downside breakout a couple of days ago. I talked about that. A bounce back a little bit more to resistance and then down again. Next, XLK, same exact comments. XLY, new low for many, many months. Looks like over a year. What is this one? Common Direction SP. I'm not sure what this is. It's the S&P CEL. Consumer discretionary. That's it. So it got oversold. It may bounce a little bit more, but the major trend is down. And with new lows for many, many months, I'm looking for lower levels again. XLF got oversold a few days ago. It's bouncing and has a gap to close at a little bit higher levels. I really can't make a decision. XLI, I think this rally is going to fail real quick. And I think it's going to turn right back down again any day, like tomorrow. XOP, bearish, neutral for a day or two, but I think we're going to see new lows real quick. Next, GDX. This is the gold miners index. Looking for, well, a lot of nothing, frankly, at the moment, kind of neutral. OIH, oil services. Really don't have much to say here. Looks like we're forming a downward slanting channel, and that could be a bullish formation. It usually is. Other than that, there's no breakouts and nothing going on of any consequence. I don't really have a great comment. XLB, bearish, looking for lower levels. Next, XLV is in Victor. Could stand a little bit more rally, a minor new high to close a gap of a few days ago, and then back down again somewhat. And lastly, XLE, neutral to bearish, looking for lower lows in the next few days. This is the last recording for about a week. Next Wednesday after Christmas, I'll be doing the recordings again. I'm going to fly down to family. You guys have a great Christmas and talk to you next week. Thank you very much. Profitable trading to you.